Hi guys, today I want to talk to you guys about how the rich stay rich by being in debt. Well, that may sound a bit contradicting, right? But the very simple term that they use is this technique, this method that they use is actually leveraging. So by debts, I don't mean like your credit card loans, your car loans, or borrowing money from friends and not returning. The loans that I'm talking about are like, for example, your housing loan. So let me give you two reasons why the rich will always stay in debt and they will never pay off, for example, in this sense, their housing loan. So reason number one. Reason number one is, do you know that in Singapore, right, whenever you purchase a house, whether it be condo or HDB, right, you will always have to purchase this thing called a mortgage insurance. So mortgage insurance, in very simple sense, means that, okay, let's say husband and wife, okay, buy a house together. They both, let's say they pay 50% each, right? Okay, so in the event that either one, right, actually passes away first before the house is being paid up, okay, the bank, okay, or the insurer will actually step in to pay for the whole house or the part of the house, depending on how much they have insured at the point of purchase of the house. So imagine you were to pay off your house, that means to say that your mortgage insurance is void and you paid off, the bank don't have to pay you that amount anymore to cover the survivor. Okay, reason number two is that you can put your money to better use. Let's say, for example, okay, you have 100,000. Let's say if you have 100,000 left in your, you have 100,000 in your bank account, and you have 100,000 left in your loan. Okay, given a choice, right, most people will use that $100,000 to pay off the loan, and then they just they have fully paid up their house. But this is not very effective in making use of money, because one thing, your property is a dead asset, which means to say that your money is growing, but it's like zombie it grows at a very slow pace. Okay, it's not active. If you take a look at historical property prices, they are growing at a very turtle rate. Okay, so if let's say for the same 100,000, right, okay, you go and put it into investment of, let's say, 4 to 5%. Okay, your property will definitely not give you that 4 to 5% in a year. Okay, unless it's a very bullish market. But as of now, we're actually approaching a bear market. So let's say 100,000 were to be growing at 4%, you can actually use the installment for the 4% to pay off your housing loan. Does it make better sense? It does, right? Because you see, the housing loan current interest rates are running at about 1.2, 1.3, 1.5. So if you have a return that is 4% every year, essentially you're just covering off your home loan. In fact, I'm working on a project to encourage my clients to actually take money out from their private property to do investments. Because you see, very simply, you borrow from the bank money, okay, of your house. Maybe this is your house, then you just take out money from your house. Okay, you take out maybe 300,000, and then you pay the bank at 1.5, 1.6%, for example. Okay, and then they will use that amount of money taken out from their house, okay, to actually do an investment at about 4 to 5%. Does it make sense to you or not? So do you see why the rich, right, will always become richer and why they will always stay in debt? Okay, so these are the two reasons why the rich will always stay in debt. Okay, I hope you have learned something. If you'd like to find out more how you can utilize your private property, okay, do reach out to me. Okay, I'll see you guys tomorrow.